Hello folks, and welcome to this week's edition of the Satori Traders Precious Metals News. On the cover this week we have NOVO Resources, and they are on the cover because they are pouring their first gold bar this week. That will mark their transition into the world of producing miners. And so that's a significant change for NOVO Resources. Let's jump right in and look at their chart. This is the chart of NSRPF. That's the over-the-counter symbol for NOVO. And we can see that last week, or actually it was week prior, the significant surge higher as price jumped above the 200-day moving average. This was around the time that they got final permitting for their processing plant. And so we can see a surge above the 200, pull back to test that as a breakout level, and then on Friday we had a powerful surge higher. So very nice price action there. Ideal volume behavior to coincide with that price action. So chart's looking great. The accumulation distribution, that's not very exciting, but one of the unique things about NOVO is that investors don't really understand the story. NOVO has some unique assets in Australia, primarily nuggety gold in gravel aggregates. So basically sheets or layers of gravel that contains nuggety gold. And that kind of gold, you can't evaluate or the extent of that mineralization using traditional method. So investors have ignored or not been excited about the NOVO story. And of course, that hasn't stopped NOVO from proceeding with their plans. They're going to bring this gold to market whether investors recognize its value or not. And of course, at this point, once the company's in production, they will demonstrate to investors that they're a viable company with cash flow. Hard to argue with cash flow. And so that's NOVO. They're looking good. Next chart we want to look at is Newfound Gold. And this is another exciting company. And the recent excitement here is that they have filed with the SEC to be listed on the New York Stock Exchange, the New York NYSE American Exchange. And they'd like that to happen in the first half of 2021. And I believe the reason they are seeking a U.S. listing is because they know that they have discovered a major mineral deposit, and they want to have the widest access to investor capital possible. And that means a U.S. listing. And so the fact that they're seeking a U.S. listing tells me that they have a they have a significant deposit. This is going to be a serious company. Once they have their U.S. listing, that will serve as a price catalyst. It's going to drive their share price towards the $5 mark, I suspect, fairly quickly. And then once the share price is above $5, institutional buyers will have access to the stock. And ultimately, the ETFs, the mining ETFs, are likely to add Newfound Gold to their components. And we'll see all of that unfold in time, likely in 2021. Let's move on to gold. So gold is continuing to gather energy below the top of this downward sloping channel, and of course the 50 and 200-day moving averages as well. This is a big surge last week, so very powerful surge off of this. It was the last engineered takedown of the precious metals markets, and we can see that price surged back quite strongly, reached the upper boundary of the channel and the moving averages, and then pulled back on Friday. That's where we're at now. Healthy pullback, support along the 1820 level, just gathering energy, waiting for the breakthrough. In silver, basically the same story. So that price gathering energy below resistance, waiting for its next move higher. The physical silver market has continued to tighten this week, and actually the shortness in supply has moved from the retail level, which is typically 100-ounce bars and smaller. The shortage is now occurring in the wholesale market, which is most often the 1,000-ounce bars. And so we have two sources of demands for those 1,000-ounce bars. What has been the standard demand is from the silver-backed ETFs. And so investor demand for silver right now is incredible. SLV last week had two big days. On one day, they added 34.4 million ounces of silver. That's in a single day. And then that was a record. And then 2 days later, a new record at 56.8 million ounces of silver. So that's, what is that, 80, 90, that's 91 million ounces of silver that were added to the SLV ETF just last week. So tremendous demand for physical metal. Now, I'm not recommending SLV or GLD. It's questionable whether they actually hold the metal that they claim they hold. If you read the prospectus for those ETFs, or trusts, I believe they're called, and I have read their prospectus, there's all kinds of verbiage about sub-custodians, and there are absolutely no requirements for the sub-custodians to maintain custodial trails, no requirement to have audits. Basically, it's basically a free-for-all. And so anyway, I do not recommend SLV and GLD for serious investors. That's not the place to put your money. That's not real metal. And it's certainly not metal that you can put your hands on. Stay away from SLV and GLD. Another factor on demand for the physical 1,000-ounce bars, the retailers are actually paying a premium for those bars because they're trying to satisfy their customers. A lot of demand for physical silver right now. It's a very interesting situation. Let's keep rolling. This is GDXJ in the weekly time frame. I got tired of looking at my messy, cluttered daily chart, and so I took a fresh look this week. Started with the weekly chart. What it looks like to me is price is basing along this support level. This is nice action. I mean, we can't, nothing wrong with that. Just it's a continuation of the correction. Price is forming a nice base here. This is going to be a solid foundation for the next up leg in the mining stock. GDXJ in the daily time frame, again, we've got price just basing along support level, gathering energy below this resistance level, which is the top of the downward sloping channel. SIL, the silver mining ETF, same kind of story. Price is just basically basing, moving sideways, marking time last week, but still positive action. We're above the 200-day moving average. SIL, more bullish than gold right now. Silver, more bullish than gold. So SIL is above the channel and above its 200-day moving average, in contrast to GDXJ, which is below both of those levels. So the dollar last week was surging higher, but then we saw it bumped into resistance. We dropped down to the 4-hour chart and saw that the dollar had bumped into resistance and rolled over pretty dramatically. And so here in the daily chart, we see that sell-off continued, and now the dollar has dropped back below the resistance zone, and interestingly is being squeezed, pretty tightly squeezed between the 20 and 50-day moving averages and between the resistance zone and support along the median line. And so when price gets squeezed like that, it's typical that we'll get a decisive, an impulsive move out of that squeezed area, but we don't know the direction. And so in this case, it's challenging to say in which direction the dollar is likely to head from this squeezed condition. If we look at MACD, it's in bull mode, both indicator lines above zero, which indicates that the primary trend remains up. And of course, the dollar is above the median line of the pitchfork, the shift pitchfork, which suggests that the next price target is the upper median line of the fork, and again, 992 or so, like we were saying last week. Interest rates on track. They're targeting 1.5%, and there's nothing in this chart to indicate that that target won't be hit. So, and that was a big move. That's 2.5%, 2.5% higher on interest rates last week. In the daily chart, we can see, so last time we talked, interest rates in the 10-year were breaking out above this resistance level. And then during the week, we got a pullback to support at the 20-day moving average. And then on Friday, we got a decisive gap over the breakout level, and price, or yield in this case, closed on its high, which of course is a bullish indication. Everything in this chart says that the trend is up and that interest rates will continue rising. In the equity markets, the ongoing melt-up continues. I mean, everybody knows at this point that the Fed is on hold at 0% interest rates. That's not going to change for the next couple of years. They're not going to stop pumping at least $120 billion a month into the financial markets. The last time they tried to tighten, they crashed the equity markets, and so they know that. And so it's a little bit worrisome to have a situation like this where everybody knows what the Fed's going to do, because when everybody knows something, that's likely not what's going to occur. So anyway, I'm a little bit concerned about the equity markets and their ongoing melt-up. When I was looking at these charts today, I was thinking about trailing stops and how if I had exposure in these markets, I'd be wanting to protect profits and minimize risk. Dow's obviously it's pushing into resistance at the top of this mini channel, getting close to resistance at this. This is the second median line extension of this mod shift pitchfork. Dow, similar story, finally pushed above this horizontal resistance level. Now it's dealing with resistance at the median line extension of this Andrews pitchfork, very tightly squeezed. And again, as we discussed in the dollar, when price gets squeezed like that, it's likely to make a decisive move in one direction or the other. Nasdaq continues to be more bullish than either the S&P 500 or the Dow. So we can see that it has pushed above, or is in the process of pushing above its mini channel, and has successfully broke above a median line extension of this mod shift fork. Yeah, obviously the Nasdaq is bullish. In Brent, we've had a strong move higher. So that's 2 weeks in a row now where oil has moved strongly higher. Now it appears that price may have run into resistance at the median line extension. Perhaps that's a top. Perhaps it's just a pullback. This is the current candle, and so that candle is still being drawn as we speak. That's Brent Crude. I've got a few more things and we will be done. Bob Moriarty, he's an old guy. And I say that with affection because I'm an old guy too. I like Bob. He's crusty. He says what's on his mind. He doesn't hold anything back. And that's true of his writing as well. And so we're looking at 2 investment books by Bob Moriarty. They're available on Amazon. I highly recommend them. Bob packs more investing wisdom into just a few pages than other authors are able to pack into entire books. And so I highly recommend these books. This one's $8 for the paperback. That one's $13. So $25. Pick up these 2 books. It's a wealth of wisdom. Anyone interested in mining stocks, read those 2 books. You'll be glad you did. Bob's new book came out this week, and I'm excited. I've got my copy. I'll receive it this coming week. So obviously I haven't read this book yet. It is the story of NOVO Resources and their activities in Australia. Now, Bob believes that NOVO will ultimately be the largest gold mining company on planet Earth. He really has great expectations for NOVO. And Bob's the real deal when it comes to mining. He's got decades of experience. He's been out in the field. He's kicked rocks. After I've read this book, I'll do a review on it. So I'm not recommending yet that you buy it, unless you're just like me. I enjoy reading about gold mining. I'm passionate about the subject. So I buy every gold mining book that comes along. I'm not recommending that everyone buy this book yet. Let me read it, and I'll tell you what I think. Just so you know, it's now available, and Bob timed the release of this book to coincide with NOVO's first gold pour, which should occur on the 14th or 15th. Folks, that's all I got this week. Have a fantastic week. I hope it's a profitable one for you, and I look forward to speaking with you again soon.